Well, we of course have those CPI figures, also PPI, retail sales. We're seeing the effects play out in equities and bonds. Let's dive into all that data now with Luca Santos from ACY Securities. So inflation, consumer inflation, and on the factory floor, hotter than expected.
Yes, good morning everyone. Good to be here again. Yes, we did had inflation higher than expected. And you know, that was kind of interesting because when we had the inflation higher than expected, the market didn't react in a sense. But once we had the PPI yesterday, the market said, okay, I know where we're going now, and the inflation is still there. It's still sticky. Something that I find very interesting is that on June 2023 last year, one of the Fed minutes, I don't know how I got there, but I was just reading through this last week. And Jerome Powell said, yes, inflation will continue to be sticky in 2024. But the most important is the unemployment rate will continue to get to the peak in 2024. So I think there is a very hard time for the US this year in terms of sticky inflation and people still unemployed. Even though we still have higher NFP, you know, as we did had on the 1st of on January and now on February. Unemployment continues to be there. So in the terms of economic perspective, when you have people getting paid less, people getting like laid off, you know, high unemployment number, and still have PPIs higher and as well CPIs higher, doesn't match. So in my opinion, there is something going on US right now. I don't think it will get into a recession, okay?
Yeah.
I don't think this will happen. Maybe a technical recession, but GDP sounds pretty resilient there. But now when it comes to US dollar, yes, we did have a reaction.
Yeah,
on
well, I was
the US
going to
dollar.
ask you that because bond yields climb, the greenback climb. So dollar remains king, at least for now.
Yes, definitely. And it's pretty funny because, as I just said, usually when we have a higher CPI, you know, Forex market, currency market tend to react positively for the currency. Well, the market didn't react positively on the CPI. But when we see the PPI, you know, Aussie dollar falling, pound dollar falling, euro dollar did fall a lot yesterday as well. USD JPY is another case, but you know, US dollar is still the king. Yeah, still the king. I think it will continue to be for the first quarter at least.
Yeah.
And then maybe lose a little bit of strength toward the second half of this year.
What is the retail sales picture telling us about the health of the consumer? I mean, earlier this week we also saw Dollar Tree, the discount store, announce that they have to close stores. So there must be some pressure there. But what are you seeing in terms of consumer strength?
Consumer strength. Okay, so when we looked at retail sales as we had yesterday, right, came in lower than expected. Of course, it would come sort of lower than expected because people are getting paid less, and as well there's less people working on the economy. If we continue to have these sort of retail sales coming in, that should be fine. You know, lower retail sales. But if we continue to have, if we still have higher retail sales and people getting paid less, this shows to me that people are spending money that they don't have. And if they're spending money that they don't have, problems will happen, like, you know, default mortgage payments and so on. So when it comes to US, I don't think it will get into a recession, but everything's sort of lining up to it. So in my opinion, yeah, I think US will have hard times in the second half of this year if we continue to see the exactly same data as we're seeing right now. Retail sales bad, you know, unemployment bad, and NFP going higher, CPI coming high as well, PPI coming higher. So yeah, that's pretty much my my take on the US right now.